Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options and ES futures. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters ahead of the opening bell. We were quite active on Monday, particularly in the final hour of trading, where we had elevated volatility sparked by a Trump comment at 3 o'clock. We took a total of 6 trades, 5 winners, 1 loser. And 3 of these trades were taken in the final hour of trading, where I traded them live on stream within our Discord server. And I like to do this when there's elevated volatility. That could be when we're in a negative gamma environment or in that final hour where premium is very volatile and it's just too hard to follow via Discord posts. So I'm always on live stream if there's good volatility, and there most certainly was on Monday. 5 trades, all being over 100% ROI. The best trade, 218% return on the 73.95 long calls. This was the last trade of the day. Now, I did have a loser in here, negative 73% on the 73.85 long calls, which was a little bit disappointing because I essentially closed these out at lows just before that Trump headline. Could have been a 500% trade, but it is what it is. Overall, very good day. Matter of fact, the best day of the portfolio thus far, adding about 7% to the total return, which now stands at 17.15%. That is 6 trading days and 6 winners. So perfect win rate here in terms of days. Of course, we have losers in here with the total win rate at 74%. Popping over to the SPX chart to go over yesterday's price action. The 5-minute and 15-minute trends were down, defined by 2 moving averages, the 20 EMA in green, the 40 EMA in red. So when the 20 is below the 40 and downsloping, that is a downtrend. So we saw follow through on this downtrend from the previous session. Additionally, we had a series of lower highs, which is also a signal of a downtrend. The high was put in last Thursday, a lower high in that same session, a lower high on the Friday session, and then another lower high here on Monday. And we saw continuation via the break of the previous session's low for a move down into 73.50 before we had that Trump headline, which sparked that 50-point rally. You can see that big candle right there. And then, of course, we settled just above those transitional levels. A lot of opportunities. I did take a trade at 10 o'clock-ish, which I think is quite notable here, is a really good setup. So we had a move into that downsloping trend line, into those moving averages. But we also had what's called the max call here at 74.30. This is the strike with the highest 0DTE call volume, which generally acts as an upside target and upper bound. So essentially we shorted at that level, 74.30, 74.35, for a move back down towards those transitional levels. Now, ultimately, we broke those transitional levels, which is generally a bearish indication, but we didn't see a lot of downside momentum. It was just kind of barcoding down, a lot of chop in and around here before we had kind of volatility pick up in the final 2 hours. But in regards to this transitional level, or any level, the more times we test it, the more prone it is to break. So when you got 1 test, 2 test, the 3rd, the 4th test, more times you test it, the more prone it is to break, particularly if it's in the direction of the trend. And that's what most certainly happened here. But I would say overall, there was good trades on the short side, good trades on the long side. And then, the final 2 hours, particularly that last hour, I mean, that is a 0DTE trader's paradise. Really easy money, clean price action, good volatility. But the session did look quite neutral for most of the day. I think I called early in our Discord at around 11:30 that I was looking for a flat close at 74.05, which we basically got here, closing down just 0.7%. But the reason I say it was more neutral than imbalanced, because if we look at the market internals here, breadth was plus 1,300 at its peak. It did bleed lower throughout the session, but it remained in positive territory above the 0 line, telling us that the sell-off was not broad-based. We also see this reflected in the relative sector performance chart. So what we have here is this horizontal zero line is the SPX. The red line is cyclical and defensive sectors. The green line is growth sectors. So when the line is above the zero, that is outperformance. Below the zero, underperformance. So whenever you're seeing underperformance in growth sectors, generally an indication that upside is limited. We did have a nice rebound in growth in that final hour of trading. But remember here, not all stocks, not all sectors are created equal. The SPX is a market cap weighted index. So we always want to give extra attention to the growth sectors. XLK technology, for example, is about 33% of the index. XLC, XLY, two other big sectors. But the second biggest sector is actually financials, which is about 13% of the index. So something you want to pay very close attention to as well. Of course, semis, megs, and semis have been running the show as of late, but we've been starting to see that trade break down. They closed down 1.8% yesterday, down another 1% in the pre-market. So if that trade starts to get unwound, that is going to exert downward pressure on the SPX, even if we see that rotation into cyclical and defensives, just due to the market cap weighting. Additionally, yesterday, if we look at the VIX, that 19 handle has been a point where vol sellers have been very active, and it held as resistance. We've continued to see volatility sellers active there yesterday. No breakout in vol, which definitely helped cap downside as well. Now, in terms of that downside, we did have 73.50 as our max put. So similar to the max call, this is the strike with the highest 0DTE put volume. It is a downside target, potential bounce point. And that's essentially where we tested before we had that reversion back to those transitional levels at about 7,400, 73.95. For today, not a lot has changed. On the 15-minute, the trend remains down. The 20 EMA below the 40 EMA and down sloping. On a positive note, we did break this trend line and closed above the transitional zone of 7,400, 73.95, which is a positive, but it does look like we're seeing more selling pressure here in the pre-market. SPX down about 0.5%. So this is going to be a key level. It is known as fair value, right? That's the dealer transitional level. Above bullish, below bearish. If bulls can reclaim, hold above, it opens the door to 74.30, 74.35. So really bulls need to break that previous session's high. And then it opens the door to 74.50. And then you have 74.70 to 74.75 zone up here as resistance. I don't know if we're going to see that today. As far as the downside goes, 73.75, 73.50, and then we have the put wall zone did shift higher quite significantly, and we'll go over the gamma charts in a second to show why. But we got the SPX put wall at 73.30, SPY put wall at about 73.18 equivalent. So that's potential downside target, potential bounce point. And then, of course, you want to keep an eye on yesterday's low, right? And that's more or less 73.50. So a break of that is the continuation signal, just as we saw yesterday breaking the previous session's low. In terms of the VIX, 1919.3 remains a key resistance zone on the upside, a point where volatility sellers have been active. In the event of a breakout, it opens the door to the 20 handle, followed by 21.5, which is the max pain for Wednesday's VIX option expiration. On the downside, 17.7, key level to watch. This marks the previous session's low. We have seen the VIX quite active over the past few trading sessions. Not trending, but we are seeing nice movements in both directions as that inverse correlation begins to normalize. Total gamma exposure for the SPX remains positive, 660 million notional. However, we continue to trade in close proximity to our main transitional level, 73.95 volatility flip. As we can see, above, all strikes are positive, that is supportive for the market price. Below, all strikes are negative, that is destabilizing for the market price. We have the put wall shifted higher to 73.30, and this is largely a function of new puts being added to this strike. So this is the open interest change day over day, and we could see 73.30, 5.5 thousand new puts, 73.25, 8.1 thousand puts. So that creates a zone on the downside, and these are mostly short dated, hence the significant gamma at that strike. So this is potential target on the downside if it becomes very bearish today, potential bounce point. But these are most likely going to shift come tomorrow. If we go back to the notional chart, in terms of the implied move today, 0.9%. That is an implied high of 74.70 and an implied low of 73.36, which again is close to that put wall. So it adds a little bit of significance to that zone. But keep in mind, the 1-day implied move is a 1 standard deviation range. That means 68% of price action is within those bands. So to really see a move beyond the 1-day implied move, whether that's the high or the low, you generally need to see quite one-sided price action. But I would say generally, if you're a credit spread trader, a pretty good edge selling credit spreads at or beyond these strikes. If you want real-time SPX 0DTE trade alerts, plus the full framework to trade the market with Edge, join the team at 500edge.com.